here to speak with you all. He's actually a blockchain consultant, works with companies and individuals to not only explain exactly what blockchain is, but really answers the if and how it can help their business. So has a very strong following, I believe, close to 60,000 YouTube subscribers?
Yep, 60 on YouTube and 140 Twitter. That's great. Just crossed.
Awesome. So I'm going to let him take it over from here, and I'll be back on stage at the end for any wrap-up questions. Thank you.
Woo. Hey, guys. Can you all hear me, or should I use the mic? Mic? All right, I need a mic. All right. All right, so I'm actually live streaming this as well. So we'll see how the audio goes on through the live stream. And we'll see, we'll give it a try. But I'm gonna go over to screen share in a minute because I do have a presentation for you guys. Let me go ahead and do that. Just wanna double check. Yeah. And here we go. Hey, thank you so much for inviting me here. It's great. I haven't first time at Plug and Play, so it's really awesome. I like it. All right, and thank you everyone for coming out. So I'm not going to spend too much time talking about myself. I'm former Wall Street, worked at Bear Stearns during the collapse, JP Morgan after that, and then a few companies then after. And I kind of got started in the crypto space by running articles about technical analysis and trading for Cointelegraph, and started speaking at a few conferences. That led me to doing a bunch of interviews on YouTube. Then I started my own YouTube channel, and it kind of progressed from there. So my two specialties are trying to explain what blockchain is, trying to explain why Bitcoin is important, and trading, because I always wanted to quit my Wall Street job to be a trader independently. And now, unfortunately, I'm a little too busy to be a trader because I'm really enjoying this. So we'll see what happens in the future. And so the presentation I wanted to do, I was debating what I was going to do. A lot of people just wanted me to do like Bitcoin analysis and trading, but I decided to do this presentation. It's a new presentation. I've been giving it at conferences all over the world recently. And I know once it's out on the internet, it's not as interesting anymore because so many people will see it and they don't really get to appreciate it at a conference. But I'm thinking it's worth a chance. But in order to find me on the internet, you can just Google Tone Vase, trying to make my name a brand. It's Tone Vase on pretty much everywhere, so you can find me. So the presentation I want to talk about is called The Inevitable ICO Bubble. How many of you were on that warship, the USS Hornet, for the conference? Okay, and those that have your hands up, how many of you seen this presentation that I gave at that conference? Oh, excellent. Okay, so a bunch of people were there. No one actually saw any presentations. Perfect. The way most conferences go. So everyone here will be new to it, and people on the internet will get to watch it as well. Okay, so I was never a big fan of all of these altcoins. When they first came out in like 2013, it was a little interesting. But when all of these ICOs started coming out, I kind of saw it as a problem. And recently, it does say blockchain consultant on my LinkedIn, but I was getting so many people that wanted me to be their advisor for their ICOs that I had to make a very specific disclaimer at the very top of my LinkedIn that says, I'm not interested in your ICO or token sale. Please send all requests to Vitalik Buterin instead, who is responsible for this nonsense. If you would like to know why I think your ICO or token is probably a scam, my consulting rate is 0.1 Bitcoin per hour. A few people have actually signed up just for this service to explain why I think their project is no good. So I do want to talk about how I feel these ICOs are very, very similar to the 2000s and the .com bubble. So what you see on the screens, you have two monitors on the sides. So what you see on the screens is the NASDAQ between about 98 all the way up to 2015. The reason it goes up to 2015, oh wait, my stuff's kind of blocking. That's unfortunate. How How do I get rid of that? Yeah, but this is still going to be a problem. Hold on. There we go. I got it fully out of the way. Much better. Okay. Almost. Hold on. Yeah. Show connected a second monitor. That's okay. It'll be fine. Cool. Trying to multitask here. Not very good at it. Okay, so what you see is the history of the NASDAQ bubble, and then it took 10 years to get back to new highs. Once we broke in new highs, we continued going higher. So the fact that once we broke in new highs, we continued to go higher, that's more of a trading thing. I'll try and do a little bit of trading analysis at the end of the presentation. I'm also going to try and go through this presentation quickly. It's good because I gave this presentation in Ukraine and English, so I had to talk twice as slow for translators. So this is going to be good. So I actually want to specifically zoom in. All right, why am I having technology difficulties? There we go. So I actually want to zoom in on the actual tech bubble part of the actual bubble that happened during 2000s. So what you do see on the screen is the zoomed in version of the NASDAQ between 1994 all the way through the bubble into 2006 or so. And a couple of things on here is Alan Greenspan, I believe he was still the chairman of the Federal Reserve. He warned of irrational exuberance back in 1996, and the bubble hadn't even started yet. Yahoo was one of the first big IPOs. It made 50% on the first day of trading, and it closed at 33 bucks. So Yahoo opened at about $16.50, closed at $33 by the end of the day. If you split adjust that, it was about $1.38 in recent prices. Amazon IPO'd not long after that, and Amazon only gained 31% on their first day of trading and closed at $23. Again, if you split adjust that, it was about $1.50 of after split adjusting. So Amazon has gone up from $1.50 all the way to $15,000 a share in today's prices. So Amazon had done pretty good. We'll get to pets.com a little bit later. That's a very special case. But I want to talk about some of the other IPOs that really went crazy further down. So the first one is actually that I want to talk about is Globe.com. So the Globe.com IPO'd November 13, 1998. On their first day of trading, the stock went up 606% on that day. And it closed the first day at $63. Now, at one point on that first day, they traded above 80 bucks. The stock was supposed to open at $9, okay? So the Globe.com was like, everyone gets to have a website. Like everyone has like their own, like, it was like a custom-made domain system where you would have a website inside the Globe.com. Okay, so what's the similarity of today? Well, if you watched my recent videos, you will know how everyone seems to think that our society would be much better if only every single one of us had the ability to print our own money. Now, the irony here is that almost every one of us has our own .com today, but it's independently on the public internet. It's not inside one specific initiative. The Globe.com went through the whole cycle, and the shares were eventually delisted as the value of the stock pretty much went to zero. And like always, it ended in a bunch of lawsuits. So what's another interesting company from those days? So the Globe.com had the record of 606% price increase on its first day of trading. That record was broken by a company called VA Linux, which IPO'd at the first trade took place at $299 at 698%, so 700% above the expected open price. The stock was supposed to open at like 24 bucks, but the first trade took place at $299. That stock did nothing but go down ever since until eventually it got down to like $6 or $7 a share where the company was closed down. What was the company? The company was basically Dell, but for Linux. They were going to custom make your Linux system. That's why, and everyone was so high on this company, opens at $700 and does no chance to make money in this company. Just went nothing but down. I actually remember this company because I've used them. This was one of the best ideas to come out. So think about this, right? So cyber rebates. So it was mostly for electronics. I'm trying to think what was popular back then. Maybe digital cameras were just coming out. So you have a digital camera that's coming out for $50, right? I think they were more expensive back then. But so what they would do is they would sell you a $50 gadget for $500. So they would mark it up by 10x. But then you can submit a rebate, and within the 6 months, they would refund the entire value of the purchase that you paid, and you get to keep the product. So their business model was they were expecting 50% of the people never to submit the rebates because they were lazy. So everyone was very, very high in this company, and they thought they were going to make money forever. At the end of the day, there ended up being about 10 people that they owed over $100,000 to. This company blew through 80 million of investment money, and again, ended in a bunch of lawsuits. But this was somebody's very good idea of how to make instant money. So the bubble keeps going up, and it's all about getting out at the top. Everyone is trading these ICOs. Everyone is loving making money, but who actually gets to get out at the top? Very, very few. So here's an example of somebody that got out at the top. Broadcast.com. Who remembers this? It was broadcast.com, right? Who remembers who ran broadcast.com? Mark Cuban, correct. So Mark Cuban initially only invested $10,000 into a company. I already forgot the name, but it's there on Wikipedia. And he didn't even have that much of the company, but he had a head for business, and he was able to convince the CEO to give him control and basically be the CEO of this company. In 1998, they changed the name to AudioNet. And Mark Cuban's initiative to get into this company is because he wanted to listen to his college basketball team play on the internet. So he basically put radio on the internet in order to listen to his basketball games. And he then ended up being the main guy to take the business further. The company ended up going public, making him a multi-millionaire. I think he was now worth $100 or $200 million. And then 9 months after the company went IPO, Yahoo bought them out, making Mark Cuban a billionaire, basically paying for the company in Yahoo stock, which Mark Cuban happened to sell right near the top of the NASDAQ bubble. And so he cashed out pretty much that billion. 2 years later, in 2002, Yahoo ended the broadcast.com business. So basically, a business that someone was able to take $1 billion off the table was no longer in existence 2 years later. However, if you got out at the very top, you did very, very well. Now, the irony that I seem to be the only one who picked this up is, how many of you watch Silicon Valley? You have to, right? I mean, you're all living in Silicon Valley, right? So I don't know about the writers of that. Maybe the joke will go better here. But what was that? And who watched Entourage on HBO before that? So I think there's a cross there, right? So what was Mark Cuban's role in Entourage? Anyone remember?
The owner of Avion Tequila.
Correct, right? And you watched Silicon Valley as well? Right, so wasn't there a character on Silicon Valley who put radio on the internet and then started a tequila and and he crossed there? Yeah. I wonder how interesting the writers are getting with subliminal messages. All right, so those were just some of the examples. The list of crazy examples of the stocks that went down big time during a 78% correction in the NASDAQ is huge. And one of the most popular things at the time was to simply change the name. Here's an example. we have eDigital. So eDigital, in 1999, in January of 99, the company changed their name to eDigital from Norris Communications. That sent their stock soaring from 6 cents up to $24.50, just by changing the name in order to match the internet. And the SEC took this seriously back then, and this is what I mean about just seeing everything repeated. We already had this penny stock got in a lot of trouble with the SEC about a year ago now, in August of 2007, where they announced that they were gonna add blockchain into they're gonna get involved in like blockchain and mining, and their stock immediately soared, and then the SEC took notice. And here's a bigger example. The Long Island iced tea company all of a sudden became the Long Island blockchain. This stock soared from about $2 up to $16 that day, the day it happened. And if you read the Bloomberg article, down there at the bottom, it says, someone was quoted, "It's so reminiscent of what happened in the 1990s, said Scott Nations, author of A History of the United States and 5 Crashes. A company that had nothing to do with the internet would put out a press release that they were going to become an internet company now, and the same sort of thing would happen. We've already dealt with all of this, like companies just changing their name in order to pump up their stock, which is not a good way to stay out of prison. So now let's get to pets.com, right? So another thing that I always hear is that the pitch, and I'm standing in like literally in Silicon Valley where investments are made. Everyone is like, how come only the rich get to get richer by investing in speculative startups? Everyone should have a chance to invest in speculative startups. The reality is, investing in speculative companies is a very specialized skill. And you know what? Most VCs don't get it right. I believe that the average VC does not beat the returns of the S&P 500. It really is a game for accredited investors. What makes someone an accredited investor? Someone that has money, they don't care that they lose. And here's an example. Pets.com IPO'd about 9 months after Amazon. And guess what? Pets.com is pretty much the same company as Amazon. One was selling books as its first online retailer. The other one was selling pet products. It was really, nobody could have foresaw which company was going to become, one of the biggest companies in the world, and which company was going to go away. To the point where even Amazon didn't know it. You know how I know this? When Pets.com was going IPO, their biggest investor was Amazon. Amazon had a 54% stake at one point in Pets.com. So even Amazon didn't know who was going to win the retail game. And people that are selling their ICOs are trying to convince you that you know who's going to win. Here's another example that people like to throw out there, Facebook. How many of you were around when Facebook launched? How many of you were on MySpace when Facebook launched? If you had to put your money on a company at that time, where would your money be, Facebook or MySpace? It would be MySpace. I know my money would have been on MySpace. I like MySpace better. I hated the fact that I had to go to Facebook. Okay? In reality, it's not that simple, which is why I don't believe that everyone should have the ability to invest, because I think that it's impossible to get it right. It wasn't only MySpace, it was Friendster. It was like a dozen other social media sites that were in competition with each other. So the average person doesn't know, and the average person doesn't have the ability to invest in them all. And 90% of the time, 98% of the time, the average person is going to get it wrong. And guess what? So is a VC. Like Amazon got it wrong with Pets.com. Okay, it really is a game for those that have the money to lose, not for everyone, which is why I'm not a big fan of what's happening right now with the ICOs. All right, let's move on for a second. And everything you see today, even with money on the internet, that's not new. I can try and play this video. Actually, it should have probably tested sound. I'm gonna give it a try. I doubt it's gonna work, but let's give it a try. Yeah, I can't get audio to come through, but that's okay. So this was actually Whoopi Goldberg from a commercial in 1998, I believe, or 99. Let me see on the next shot, it'll say. Flues.com was actually supposed to be money on the internet. So even what's happening right now with Bitcoin, like people had those ideas before. How do I get out here, actually? There we go. This was in, no, 2001 is when it went down. So this was in 99. So Flues was going to be online money. I wish I could get that audio. I should have checked it. Sorry about that, guys. And Flues was supposed to be online money, but it was centralized. And this is, again, how I see all of these other projects other than Bitcoin. They are centralized. If your decentralized project has a leader, if your decentralized project has a foundation that can make decisions, it's not decentralized. It is totally centralized, exactly the way Flues was centralized. And look what happened to Flues. Flues.com was notified by the Federal Bureau of Investigation that a Russian organized crime syndicate was using Flues and stolen credit cards as part of a money laundering scheme, in which stolen credit cards were used to purchase currency and then redeem that currency. Now, look, I hate money laundering laws as much as anyone. I think they should all be abolished. But if your project has leaders that could be accused of running a currency that could be used for money laundering, that project will be in serious trouble sooner or later. Because again, that project has leaders. Yeah, Flues blew through about $50 million. So what other interesting comparisons we have between the current ICO situation and what happened back in 2000? So I started Googling around, looked for some really, really crazy stories. Now this may need to be fact checked somewhere, but this came from Kiora. And again, the question was, what are some of the craziest stories you remember from the .com days? And this was an interesting one. Someone wrote, I knew a guy who had a company that was going to do something interesting, arguably interesting, in the field of communications. He raised a little bit of money, hired a couple of guys, and bought space announcing the product on a huge billboard in San Francisco. There was no product, there was no aspiration, there was purely aspiration, but that was the kind of thing that people did back then. And what happened? So his idea ended up getting bought out by a public company for $100 million. But they gave him a contract. They said, hey, you have to help integrate this idea into our company, and then you can walk away with your $100 million after 3 years. After about 3 months, they realized how useless he was. And they just told him, listen, just take the $100 million, go away, and we will take care of this. So he goes away with the $100 million and realizes that he didn't really have a real idea. And what does this mean about the company that just paid him $100 million? So he went ahead and bought a bunch of puts and shorted the company, making himself another $100 million. So that's a pretty good payday for someone that put up a giant billboard. And I so happened to read this during the consensus event in New York. And guess what's on the giant billboard right there in Times Square? Okay, so again, all the similarities are there to exactly what happened before. So how do a lot of these things end? Well, people get in trouble. How many of you have seen the movie Wolf of Wall Street? I know, great movie. Once again, I may have an audio issue because I really want to play this short little clip, but I will just describe it. So Jordan Belfort ended up eventually going to prison in 1999, mostly for running penny stock pump and dump. So there were a lot of things that they were doing wrong. But But here's the biggest one. And there is this short clip that I unfortunately can't, man, I wish you get the audio. I didn't prep for this, so it's okay, I'm not gonna play it. But there was a short clip where he explains exactly what they were doing. So you know how everyone is upset that it costs millions of dollars to go IPO? And only the big boys like Goldman Sachs and JP Morgan and Morgan Stanley are allowed to take your company IPO. Because when a company like Jordan Belfort's company gets to take a company IPO, and he explains it right there in the movie, they got to set the share price and they got to sell those shares ahead of time to their friends and family and whoever they wanted. This is exactly what they got in trouble for the most. And this is exactly what's happening. This is exactly what a pre-ICO is. A pre-ICO is people dishing out shares of their ICO that's going to go up for sale, and shares is going to go up for sale, and you give them out to your friends and family in order for them to pump it up for you. That's exactly what was happening back then, and this is why only certain institutions are now only given the green light to take companies IPO, because otherwise you're just going to give them out to friends. Other people got in trouble too. This guy helped take companies like Amazon and Netscape, and he was even involved in Google. And then he ended up being arrested for an IPO probe for the same reason. It's right there. He was convicted in May on charges of trying to hinder a government investigation for the IPOs because he was giving favored clients certain shares and certain prices. Okay. So this is the kind of, I'm not saying regulation does a good job, but this is the reason why that regulation is there. So coming to the end of the presentation, but there was a couple of other comparisons, right? I remember I was in the university when the dot-com bubble was happening. And one of the guys that was living in the dorms with us, he started like trading penny stocks because we were in college, we didn't have much money back then. And I never realized how badly did everything get out of control. Like I didn't learn how to trade till like 2003 or so. But looking back at it, because I learned from traders that survived the dot-com bubble, and they were saying how they traded companies at $100 a share, and those companies had nothing but a fancy website. There was nothing there, no product, no developers, nothing. But the companies were $100 a share. And here's what happened. I think that online brokers like E-Trade and Scottrade and Ameritrade, again, who remembers like the E-Trade baby from, you know, those commercials? Those companies did a lot because prior to the mid-90s, there was no way for an average person to actually trade. It was all done through the movie, again, who saw the movie Boiler Room, right? That's how it was done. You're calling people off of a call list, and that call list was supposed to be for people that had money. You're calling doctors, you're calling lawyers, you're calling accountants, and you're trying to get them to buy into a stock. Now, there's lots of scams there as well, but you're not calling the barber, right? You're not calling the cab driver. But when E-Trade and Scottrade came out, now the cab driver can trade. Now the barber can trade, okay? They still had some restrictions. They still needed a bank account. They still needed to be over 18 years old. If they wanted to be day traders, they needed to have $25,000 to play with. Now they could have made $25,000 fairly quickly going up on the bubble. But so many barriers to entry got removed with brokers. And now what's happened with the ICO space, there is no barriers to entry, right? There is no geographical restriction, so anyone can trade globally. There is no age restriction. There is no financial barrier to entry. This is why it was amazing how many people like became traders all of a sudden because there's no barrier to entry and you can just do it. Now, the age restriction is the really, really interesting one. Here's some real conversations. Dear Mr. Vase, I am 15 and a half years old and in high school. I am interested in Bitcoin. And he's asking me advice and he's talking about Elliott waves and some of the advanced features of trading. And it's like trying to get my advice on what he thinks about the price of Bitcoin and what he should buy, 15 and a half. And if you look at the other one over there in the corner, here's how that conversation went. The person says, let me see here. He asked me about a specific token, and I said, yeah, I don't really care about that token. And the reply was, well, I like it, but I'm 13, so I would like it. And I'm like, I'm not sure what you mean. And then he has to clarify, oh, I'm 13 years old. So like, I don't realize, like sometimes you don't realize who you're talking to, right? Because you get like cold texted and you realize, oh my God, these are the people that are actually trading this stuff that's worth real money. So they really are 13 and 15. These are like true, those are true text messages. Okay, so let's skip that. Let's skip that. I'll skip those. I do want to get to your Q&A. And I really like these tweets by Alex Marcos, who said, there's one big difference between traditional startups, funding, and ICOs. Funders of failed startups should not come away financially enriched. He then goes on to say, risk capital to explore ideas is great, but incentives aren't aligned if founders make money at the expense of investors, regardless of outcomes. And we've already seen this, right? Like the moment the ICO money comes in, these people leave and they start a new one, right? Well, like I've been all over the 7 of the 8 co-founders of Ethereum since day one. This is why I hated Ethereum from day one. You know, they're doing their pre-ICO, there's 8 co-founders. A year later, when Ethereum launches, there's 1. You know, same thing. I always give somebody like Daniel Larimer. I mean, you basically create your own token with BitShares, and then you leave. Then you create your own, you know, token with Steemit, and then you leave. And now you're creating your own token with EOS, and then he's probably going to leave and start another one, right? So this is what's pretty much happening in the space. You can just go away. I sent a follow-up tweet in that, I believe it was in that same string, where I try to explain the difference between ICOs and Bitcoin that I already mentioned. Try to explain to a person, ICOs are just centralized schemes. I mean, I like to call it printing securities or printing money. And for some reason, when you print both securities that can be money, people think that it seems to be okay. It's really not. And it's basically done to separate unqualified investors from their actual money, whether it's dollars or Bitcoin. Bitcoin is actually a decentralized asset class, unlike anything else that we've seen coming out of the ICO space. So I pretty much close it out on that. People always ask me the question, how come I don't like Ethereum? And I'll answer that ahead of time. I believe there's 4 major problems with Ethereum, and every single project almost every single project in the altcoin and ICO space has at least one of those problems. Ethereum just has all 4. So the 4 problems I see with Ethereum are, one is regulatory. I believe that Ethereum was an unlicensed, unregistered security sale when they did their pre-ICO. So nothing's changed. Everybody else is doing very, very similar stuff. But we'll see if the SEC goes after somebody similar to Ethereum. What does that mean for Ethereum? But I do believe it was an unlicensed, unregistered security, which is why I never paid attention to it. My other problem with Ethereum is technological. Most of the blockchain engineers that I've spoken to, they're all pretty much convinced that Ethereum just can't scale technologically. It's impossible to download the entire history of the Ethereum blockchain. It's growing faster than your computer is able to download it. I mean, maybe if you have a 300 megabit speed, you might be able to pull it off, but there's no way the average person can do it. And you may not even be able to do it at any internet speeds. So they have a major scaling issue. And how are they going to show up at their miners and tell them, hey, can you just stop mining? We're going to proof of stake. I know Ethereum is like $600 a share or 400 or whatever it is, but just you don't need to make that money. Just like let us who hold Ethereum make all the new Ethereum without any mining. So that's a huge technological barrier. My other problem with Ethereum is just conceptual in general. I don't think we need decentralized smart contracts because decentralization is a grossly technologically inefficient tool. It's slow, it's expensive, it's difficult, and it's worth it when you're using it for censorship resistance. So in the case of money, every single payment we ever make is controlled by governments. So Bitcoin needed to be decentralized in order to break that. contracts are not exactly censored, right? Like the government is encouraging contracts because they want commerce. So decentralizing something that's legal makes absolutely no sense. It's kind of like trying to decentralize Airbnb or Uber in an area where Airbnb or Uber is legal. It's not going to work. It'll work in areas where it's illegal, but it's not really going to work where it's legal. And my final problem with Ethereum, and again, this applies to most of the other tokens, is the concept of an application token. You are forcing your users to be speculators of your product. So you're charging in a volatile currency / security for the services of your product. This is almost like eBay charging eBay stock to buy on eBay. You're turning every one of your users into a speculator of your platform. Now, in the case of eBay, at least it's not being traded by 13-year-olds, but in the case of Ethereum, it is. And you can scale that up. Well, okay, fine, I'm willing to pay volatile eBay stock to buy things on eBay. How do I get eBay stock? Well, you have to go to E-Trade. Okay, excellent. Let me go to E-Trade. How do I buy eBay stock from E-Trade? Well, first you have to buy eBay stock because eBay stock only accepts eBay stock for you to buy other stock. So this is what happens in a system where you're forcing your users to use the currency quasi / security of your own product into your users. So these are my 4 problems with Ethereum, and almost every other project shares at least one of those. Almost nobody shares all 4 because all of those projects are generally built on top of Ethereum. So they're adding all of the Ethereum risk into their own project as well. So I see that as being a big problem, and that's the bubble that I'm actually seeing. I am pretty happy with the Bitcoin's underlying technology. All right, guys, so that's pretty much it for my presentation. I can take a glance at the price of Bitcoin in case people are curious, and then we'll do your Q&A. And we are holding the 50-week moving average, but this is not looking good to me. I did a video of this morning. Let me get this guy out of the way. And it's going to be all about the daily chart. This is what I kind of do on my podcast every day, besides covering the news. And I am expecting prices to continue to go down for now, because we continue to make lower highs here, here, and here, and lower lows here, here, there, and potentially coming up. And in general, I have this view on trading that you don't get 2 chances to buy the perfect low. So very few people got lucky buying Bitcoin in this $6,000 zone. You don't get lucky twice in the stock market. So now that we're back in this low $6,000 zone, those that think, oh, I missed it here, I'll get it here. Those are the people that are going to feel the pain when it drops below 6,000, and those are the people that will have to panic sell. So at this point, I'm almost looking for lower prices, but I am hoping that like the $4,900 area would give us a bounce all the way up, and then we kind of stay going up. I'm not really going to go into the lower level time frames. We'll just jump over to your Q&A on that note. All right, thank you guys. Wait, here it is. We got the live chat. Hope the sound worked well on the live chat. All right, so go ahead and ask the question. I'll actually repeat it for the live chat people. All right.
So you mentioned when you're talking about Ethereum and centralized smart contracts. But what about something like real estate title registration, where the government can actually be a bad actor, like a third world country? Kind of makes sense to have a decentralized, distributed smart contracts.
All right, so the question was basically real estate on the blockchain to prevent, potentially bad government actors. Yeah, governments don't care. Like the government doesn't care that you own real estate on a blockchain. They'll just come and take it, right? I mean, your family can then come back, let's say in 40, 50 years when that dictator leaves power, and say, hey, 40 years ago, I have a claim to this property, it was on a blockchain, but people that have been living there for the last 40 years will disagree, right? So the governments just won't care. So that's one reason why real estate on a blockchain doesn't really make sense. Another reason is anyone can, first of all, you can't control what people put into the blockchain, right? So if everyone actually trusts in the blockchain, then what's stopping a government actor from saying, hey, you know what? This guy has nice land. I want to give this land to my cousin. So let me sneak that into the blockchain, because are you going to be auditing the blockchain every second? You're not. And all of a sudden it's in the blockchain. And boom, this is how a person that's putting data into the blockchain gets to take your land. Another problem with real estate on the blockchain is the beauty of the blockchain is that it gave us bearer instruments on the internet. Like we can now have cash on the internet. Now that application doesn't work in many, it only works in very niche cases. Like my favorite properties of Bitcoin are the fact that for the first time in human history, we can own something of value that nobody can confiscate from us. If you properly secure it and preferably keep your mouth shut, nobody knows it exists. And no one can confiscate your Bitcoin as long as the Bitcoin blockchain is working. Also, it's censorship resistant. So I can actually send my Bitcoin to anyone in the world and solve with a double spend problem because of mining. Now, there's a problem here in that if I can accidentally lose all my Bitcoin and delete it, or I can accidentally send all of my Bitcoin to a random person or my neighbor. And there's nothing I can do about it, getting it back, other than asking for it nicely. So having real estate on a blockchain, on a real blockchain, basically allows you to accidentally delete your own ownership of your real estate or accidentally send that ownership to someone else. And I don't think anybody wants that property. So I don't see, and medical records on a blockchain is kind of like the same idea. Like you don't want to accidentally delete all of your medical history. Therefore, you probably don't want it on a blockchain. And if you don't have the ability to accidentally delete all of your medical records, then it's not on a blockchain, it's just in a database. So that's the true power of the blockchain. Yeah.
Based on the graphs and the IC bubble that you've been portraying, do you think the bubble has already popped? And if not,
Oh God, no, I think it's getting worse. Like it just doesn't seem that way. It's like you go to these conferences, like I was supposed to speak at a conference tomorrow with a, it was gonna be like a really legit conference. And they ended up canceling it because they couldn't sell enough tickets. Meanwhile, I speak at these ICO conferences, try to explain to everyone in the audience how bad ICOs are. I don't know how I end up getting these speaking gigs, but these conferences sell out. They're insane. It's like thousands of people show up. Yeah, no, it feels like it's getting worse. It's not, and this is kind of how these bubbles happen, right? And I'm almost starting to understand from a business perspective. Let's say you have a really good idea and you've gone to like every VC and you finally got, $100,000 to start this project. And then someone comes along that is significantly more incompetent than you are and is doing the same thing, but ICO'd and just collected 20 million. They obviously have way more money. They have way more runway. So you're almost forced to also ICO because otherwise you're going to lose your job. You're going to lose your business. An interesting thing is happening right now in the crypto exchange space. How many of you like trade cryptos? All right. I should ask how many of you don't trade cryptos. How to be safer. Like you had all of these crypto exchanges, right? Like even like, Poloniex and Bittrex, even like the crypto ones. And all of a sudden, here comes Binance. Binance came out of nowhere. And guess what? Binance ICO'd. So all of a sudden, Binance, without any obligation to real investors, suddenly has, like $20 million to play with, right? So how do these other exchanges compete when another exchange gets to print their own money? You almost can't. you're almost forced to ICO. And we're getting to a point where everyone wants to ICO until the general majority gets so saturated with every ICO and they just say, you know what, I'm not going to buy anymore. And that's what happens. Like when these bubbles pop, it's not because smart people are selling at the top. It's because there's just nobody left to buy. And just nobody left to buy. And no one's buying. One person wants to buy this, one person wants to buy that, a few people sell, and boom, it goes down. That's what kind of happened with Bitcoin. When Bitcoin was going up to 20,000, it was just, everyone was on this hype. Oh my God, Wall Street is getting in, it's gonna be the CME, it's gonna be the futures. The futures are coming, CME is launching Bitcoin futures, and everyone is buying, and then the futures launch, and barely any volume, nobody cares. It was like a non-event. And then, one guy sells, another guy sells. The Mt. Gox, Kobayashi, is forced to sell to give people money back in the stupidest possible way. He's not helping, he's selling. He panics at the very bottom, sells like 18,000 Bitcoin. Like, it's not because there's no conspiracy here. It's just people were no longer willing to pay 16,000, 17,000, 18,000 for a Bitcoin. And some people just want to start to cash out, and then it scales out until there's nobody left to sell. And now it starts to go back up. Question?
I have a question regarding the technology itself, blockchain technology, not the cryptocurrency. With all the quantum computing power that we have, and with Wall Street actually getting involved on blockchain for technology, where do you foresee the level or the speed of integration in the next 10 years? I mean, that's already happening, but we're not really reporting on that aspect.
Sure. So the general question was, you have a couple of things there. I may have to clarify a lot of the differences. So it's kind of like the blockchain technology separate from the currency with Wall Street's computing power and potential of quantum computers. So I'm not exactly technically qualified to talk about quantum computers, but my understanding of it is that quantum computers, if and when they show up, the biggest danger to Bitcoin and cryptocurrency is that those computers will be able to break encryption. So the biggest worry is that those computers will be able to break your private key and steal your Bitcoin. They're not going to actually be able to mess up the mining structure. So now encryption could always be upgraded, though that would be a challenge about upgrading the Bitcoin code because it was a nightmare getting SegWit into the code in order for Bitcoin to scale. So I'm sure there'll be plenty of people preventing the upgrade of encryption of your private key because most people are incentivized to pump their own, coin like Ripple or Zcash or you name it, right? So if you're a big Ethereum holder, you want Bitcoin to die. If you're a big Zcash holder, you want Bitcoin to die, right? So so many people would rather not have Bitcoin because they have a larger, they're trying to get rich on a lesser alternative. As far as separating the currency from the blockchain technology, to me, in order to be a blockchain, you have to be proof of work. And while there's multiple proof of work blockchains, Ethereum is still proof of work. They're trying not to be proof of work. So therefore, to me, they're no longer going to be a blockchain. But there are other proof of work blockchains, even like Bcash is one of them, and Zcash, and a bunch of others. I don't see multiple blockchains in the future the way we don't have multiple internets today. I really only see one blockchain with the most number of computing mining on that blockchain. Because if you have 3 blockchains, then all 3 are kind of weak versus all of the computing power on one. And the amount of computing power that is now going into mining the Bitcoin blockchain, like almost nobody can compete, like nations can't really compete with half the world like mining. So the amount of electricity being burned to secure your Bitcoin transactions continues to go up. Now, a lot of environmentalists are very, very upset over this, how much electricity is being burned for Bitcoin. And my answer to them is, well, why aren't you as upset of how much energy is being burned to fight wars, right? Like there's way bigger issues on the burning of energy. Not to mention that I think that the hunt for that last Bitcoin is going to bring ridiculous innovation in how to source that energy. Because now you have the private sector is being incentivized to find the most cheapest, most renewable alternative resources for energy. And I think that the hunt for the Bitcoin is going to help drive that innovation. It's also like saying, oh my God, cars are terrible. Look what they're doing to the environment. Saying that back in, like, why do we need oil? It's so bad for the environment. But without oil, we'd be here today, right? Or we would still be, the way people lived in 1880. So a lot of these things just, again, hit a peak, and then people start to innovate real well within the confines. So to me, you can't really separate Bitcoin from blockchain. It's going to be one. They're going to be always going to be merged together. And unlike the internet, because you couldn't buy pieces of the internet, you couldn't profit along with the internet. So even when the NASDAQ crashed, it was companies on the NASDAQ that crashed. Internet usage continued to rise all throughout the dot-com crash. More and more people were getting on the internet. But no one could profit from the actual internet. With Bitcoin, you can actually profit from people utilizing the blockchain more and more. So I can't separate the two. I don't believe in the underlying blockchain technology. I just believe that we now have this brand new technological innovation that, like the internet, but you can actually own a piece of it. So that's kind of how I see it. And people will realize that all of these initiatives on the blockchain, you just need a better database. You don't actually need a blockchain for like 99% of the stuff that people are trying to sell a blockchain for. Whoa, like a bunch of hands go up. All right, let me go to this side and then we'll jump back. Oh, we're gonna move this way, yes.
By that definition, what kind of technology or application afford to accidentally delete the data which is suited for blockchain technology?
I'm sorry, I didn't follow the question. Can you just rephrase one more time?
Yeah, so mention realistic and healthcare doesn't really should use the blockchain technology because you cannot afford to accidentally delete the data, right?
Yes.
So by that definition, what kind of application actually afford this risk, which end up become suitable for
the blockchain. Okay, sure. Well, so far, a lot of it has been realized. Remember, like I can name a couple of things where I don't think it's good for. I can name the things that I've seen it used for where it's useful, but I don't know who's going to come up with another really good use case, right? So it became very, very popular. I mean, the first time I heard about Bitcoin was because of WikiLeaks. How many of you are familiar with WikiLeaks? If it wasn't for Bitcoin, WikiLeaks wouldn't be here. Okay, that's a use case. WikiLeaks had no funding. They got cut off from donations from Visa, MasterCard, PayPal. They literally survived based on Bitcoin donations because you can't stop the transfer of Bitcoin like you could Visa and MasterCard. Gambling is very popular because gambling websites can't really take credit cards because someone will just use a credit card, place 1,000 to 1 bet. If they win, they walk away. If they lose, like what will happen most of the time, they can try to charge back. So the gambling companies love Bitcoin as well. A lot of like poker sites pay out all of their people in Bitcoin. This is how a lot of poker players ended up becoming traders, which is actually a great prerequisite skill to be a trader, being a poker player. It really is. You understand probabilities, so you're not going to get into every possible trade. You're going to learn and you're going to be patient. Being a poker player, if you're a successful poker player, you understand patience and you understand probability. Two very good skills in order to be a good trader. Other use cases, I used to do another presentation about the history of Bitcoin and the price and why it's important economically, and I had a whole section on Bitcoin use cases. My favorite Bitcoin use case is actually, again, cross-border value transfer of your own money. Back in the day, what happens when, roads collapsing, or what happens when there is major catastrophes. What happened, what about just even recently in 2015, the Greek banking crisis? Like what happens? Your banks are shut down on Sunday, and on Monday you have no money. You're standing in line to withdraw 20 bucks. Now, if you had Bitcoin, that's it. You can just leave Greece and go anywhere else because you can move your money. Now, back in the day, you used to do that with gold. You know, hey, there is like my country's fighting another country. I got to get the hell out. What do? You know, well, you have gold, you can move it. It's very hard to move gold today for several reasons. One of them is, hey, government figured it out. They built some metal detectors. You know, it's very hard to move it. Like, what else do you have? What other mechanism? So all of these applications are pretty much in use for censorship resistance. Also, maybe one day we will utilize the timestamping feature, right? Because it's impossible to like historic so far, like Bitcoin transactions and things in the blockchain, they're kind of just there. Now, is Bitcoin a good notary service? Maybe. Is it properly going to be utilized? Maybe. So we'll see what other applications there are. But in my other presentation, I used to play this clip from Milton Friedman back in 1999, where he said, the internet will not reach its full potential until on the internet, person A can pay person B, and there's no record of where that value came from. There's no middleman. So Milton Friedman saw that the internet cannot reach its full potential until there was a cash element of people paying each other, you know, in a free way. So that currency feature is very, very powerful. And people have been basically trying to use that idea and that feature for everything else in order for them to be funded to start their companies. And now that like VCs are getting smarter and not funding them, they've gone to the crowd. All right, let's move this way. A couple of hands. All right, let's go ahead.
What are your thoughts on Azure and Cocoa?
I'm not too familiar with.
It's like a private blockchain built by Microsoft, where
it's not a blockchain. Like it's again, like there's no such thing as a private blockchain, right? It's like, what do I think? Like I used to work at JP Morgan. There was like this giant JP Morgan intranet. It's like, again, like what do you think about JP Morgan's intranet? Well, it's great for people inside JP Morgan, right? That's what a private blockchain is. It's, again, it's their database. They're calling it a blockchain as a buzzword. I'm hoping they know better, but it's pretty much just a buzzword there.
I'm a lawyer on
Yes.
cyber law, and I'm always thinking about user safety on blockchain. Do you think that is necessary any kind of regulation or no regulation at all?
Okay, so my opinion on this is like, I believe, like, I hate the regulation on money. If the government if Bitcoin is really bothering the government, it's very easy to get rid of Bitcoin. Remove money laundering laws.
Yeah.
Like allow people to just pay each other, right? Lower taxes. Stop policing voluntary contracts. Legalize drugs. Legalize prostitution. Legalize gambling. You know. Yeah, that would be a huge. I mean, Bitcoin gets its value from two things. One is it has a cap on how many Bitcoins we have. So it's quasi, you know, a check on government printing money forever. And two, it's censorship resistant. Now the censorship resistant, that property the government can eliminate by eliminating some laws. Can the government stop printing money? That one is harder, a little bit. But I would say if you believe that there will be more than one cryptocurrency, then you also believe in inflation, right? So that property is not important to you. Like if you're holding another crypto besides Bitcoin and you believe that that other crypto will survive, then you also believe in inflation. It would have been better for Bitcoin to have inflation because clearly you don't think that 21 million Bitcoin is enough. So you want inflation. That's why you believe in Litecoin. That's why you believe in Monero or one of the others, right? So what I believe is, I mean, we've had hundreds, if not thousands of years of law that has come about to prevent one person soliciting money from another person. I don't see how those laws should change with technology. I think the laws on solicitation of money, maybe they should be altered a little bit, but those laws should not change with the fact that we now have Ethereum. So those laws should remain. But as far as putting laws on the transfer of Bitcoin, that's not going to work because this is what Bitcoin was invented for. So it's like policing a person smoking weed. It's not going to work. Like, it'll work in some regions of the world, but it's not going to work across the whole world. So that's kind of my view on the regulation side of it. All right, let's go back. We're going to slide back over. So let's go here.
So being that Bitcoin is deflationary, and if, say, the US were to accept Bitcoin as their official currency, what would incentivize consumers to go and spend their money and stimulate the economy if the value of Bitcoin was just continuously increasing? Like right now, they can print more money, and that will incentivize people to go and spend their money and stimulate the economy. Well,
Printing more money isn't really incentivizing anyone to go out and spend. Maybe in Venezuela it is, definitely not here. So only when your currency hits hyperinflation are you actually incentivized to spend more money. I mean, obviously the government would never, like, no government would say Bitcoin is the official currency. They will just, allow people to spend it. Now, in reality, even back in 2008, when the government started printing money like crazy, people lost their jobs, people were saving every dollar, nobody was going out and spending, right? Like, the government has printed so much money since the 2008 crisis, and people aren't really spending much more, right? I mean, now people are starting to spend more, right? So debts are starting to go up. Like, in times of crisis, the government can't print money because people are saving every dime. As long as they think that this money will still be pretty damn good a year from now, they're not running out and spending. On the other hand, when Bitcoin's value goes up and you now just got rich, you're going to start upgrading your standard of living. Not everybody. I haven't really had time to spend any, but so I'm a lot poorer today. But most people, you want to spend that money. So in the case of Bitcoin, the highest levels of people spending Bitcoin were actually back in 2013 when Bitcoin was going up to 1,000. And more recently, like, a lot more people were spending. So deflation doesn't really prevent people from spending. I mean, there's almost nothing, like when you need something, like if your car has trouble, if you need gas, if you need to buy a new refrigerator, like, and if your wife knows you have Bitcoin and it just went up in price, guess what? You're probably gonna be remodeling the kitchen. Like, you're gonna be spending the money as it goes up in value. So it doesn't really work that way. It's just like theory. Like, oh, we're gonna print more money, people are gonna spend more. No, people are still gonna hoard it because you're printing money because there's a bad economic environment. In a bad economic environment, people don't know if they're gonna lose their job or not. So they're gonna hoard the money unless it's being printed so quickly that they feel that it'll be worthless. But that doesn't really happen in first world countries, at least not normally. Right? We're still moving this way. Yes.
Where do you see second layer solutions like the Lightning Network taking the community?
So I think it's just going to be easier as far as over the last year, it's just been such a hassle dealing with everyone saying that Bitcoin can't scale, and that's why you have to buy the money that I print. So I think that part of it will be a lot better. And Lightning Network will open it up to microtransactions finally. Now, I don't think there is a giant need to pay your employees by the minute. I don't really see a big use case there. There are all these little niche use cases of, well, if I walk around the street with an open hotspot, then everyone that uses my hotspot will pay me fractions of a penny for the 3 or 5 seconds that they use my hotspot. That can actually be done without Bitcoin. If you have Project Fi as your cell phone provider, they charge you internet usage by the penny. I mean, that could be done through service providers. So it's not that much. It'll basically just make it easier because Bitcoin was not going to scale without second layer solutions. You're literally stuck at 7 transactions a second. So now at least it can scale during attacks on Bitcoin. So it'll mostly help there. And I always envision the following: like people always worry what's going to happen to mining in the future when there's no more Bitcoin being created off the mining side. So the example that I give, I hope Netflix doesn't get mad at me one day. Like, for example, I don't know how prevalent Netflix is in Africa, right? I have to imagine there's rampant credit card fraud going on, right? So how does Netflix charge for their service? It'll allow them to go a la carte. You have a television, you have an internet connection. You want to watch a movie, you want to watch a season of a show, you want to watch just one episode of a show. A QR code pops up. You pay for it in Bitcoin. It's a non-reversible payment, right? And you watch your movie, you watch your show, right? And you don't need credit cards. You don't have to depend on credit cards. You're sending money, and you can actually, a company can go into a region that can be rampant with financial fraud and not care. So if, for example, Netflix utilizes this feature, and they will need something like a Lightning channel because they can do a lot of transactions across a continent like Africa all of a sudden. So they will need this scale. And now, if they can make an extra, $1 billion a year minimum by doing that, they're almost incentivized to keep the Bitcoin decentralization of that payment going. So they're almost incentivized to start mining even at a loss, because even if they spend $200 million a year on electricity for mining, they're still making $800 million from that feature of going into a financially, unstable region, but still, get payment for their product without any worry of fraud. So I think that's a good use case of Lightning. And again, how would Amazon ever accept Bitcoin payments, right? Assuming more people have Bitcoin. I mean, this is where the second layer solution really, really becomes useful. All right, let's move over this way, and then we go there. Yeah.
Hey, Tone, question. In your opinion, which fork of Bitcoin is the real Bitcoin, and how do you foresee the future of Bitcoin forking?
I don't really see Bitcoin forking much going forward. I mean, obviously, for me, the SegWit version, the version that got the latest technological innovation is Bitcoin, mostly because of consensus. Now, I know there is some debate that why are we moving signatures out of the transactions? Now, the reason why I don't foresee any other forks of Bitcoin as being relevant is because what made the Bcash fork so relevant is because they had very prominent people promoting it. And even right now, your ICO is not going to do anything unless you have someone of importance on your ICO team. Like the Telegram ICO did well. Hearing that the guy that created BitTorrent is ICOing, right? At this point, if your ICO doesn't have someone with hundreds of thousands of followers on Twitter or some kind of a brand name, your ICO isn't going anywhere. The same thing is going to happen with the forks. Like, unless you have someone prominent selling it to people that can sell out venues and pitch it, your Bitcoin fork is going to be ignored. Now, I don't know what's going to happen further down the line. Maybe there is, another big debate over changing something, but I think SegWit was the last big one. So I really don't foresee any other forks in the near future, but we'll see. You never know. All right.
Hey, Tim, so just quick correction, Grant Cohen, BitTorrent.
Yes, thank you.
He's not doing ICO.
He's not doing ICO.
He's going to do a Series A plus equity raise and then try to dividend out tokens as a way of issuing. But that is not.
Okay, so that's not as bad. Sure.
You made a case about the regulatory issues that could change the success of Bitcoin. So the fate of Bitcoin could be in the hands of the government if they legalize a number of these things. But today, Bitcoin transactions that, as we knew, were pseudonymous, have long since been no longer pseudonymous. So there are now enough data providers who can reconstruct all the transactions. So how do you see things like Monero and Zcash beginning to take up the slack for utility not so much the store value investment side of it. And you know, the drug markets are now also all moving to Monero, so Zcash is not getting as much attention there as Monero is.
Sure. All right. So also, I want to say for the live stream, I guess. The comment was that Bram Cohen, he's not actually ICOing. It's going to be some kind of a dividend off of real fundraising through an ICO. So that's probably borderline okay, but I'd have to look more into it. So the other question was, what about the transactional side? If Bitcoin becomes the true HODL and everyone is transacting in something like Monero because it's more anonymous and things like that. So a couple of things there. So first of all, if Monero wants to take over all of the dark web stuff, that's probably even better for Bitcoin at the moment. If the developers really feel that Monero is starting to take a real chunk out of Bitcoin, Bitcoin could be made more anonymous. And in fact, there is lots of people working on Bitcoin being even more anonymous than Monero. Because what I always foresaw is having anonymity at the protocol level is very, very difficult. Like Monero has got a huge scaling problem, way bigger than Bitcoin. And when you have anonymity at the protocol level, it's very hard to deal with your project. Like Monero, just like Zcash, I'm not sure they know what the hell's going on under the hood because of all that anonymity. So you kind of want that anonymity as a second layer solution. You don't want it at the protocol level. Also, if your anonymity is at the protocol level, you have another problem. Like my best use case for Bitcoin is a future where, you know, you do have, you know, a government that tries to be honest, and they would now start running all of the tax revenue through the Bitcoin blockchain for any first-year grad student to deal with, you know. So something like that, right? So you don't really want anonymity at that layer, right? Like I would love to have every single public employee using the public seeable version of the Bitcoin blockchain. But if you're a private citizen, you use the anonymity features. But if you're a public employee, then you're not allowed to use the anonymity features or you get in legal trouble, right? So hopefully that's, because again, like we have the opposite right now, right? You get into, you know, power to kind of avoid the laws that you create. So we got to reverse that somehow. Now, on the other side of it, if all your currency is spending it and no one is hoarding it, then no one cares about it. And this is where I see a potential problem. Bitcoin is the most decentralized currency we have. Even if it's still only at 50% of the total market cap, and I think that's going to go back to 1995. Like, if another cryptocurrency takes over Bitcoin, the store of value property of every single blockchain is gone, probably for an entire generation. Why on earth would someone like me, that has now spent 3 years talking about the Bitcoin blockchain, and I personally know hundreds of people that have way more Bitcoin than me, and way more people that I've never even met that have way more Bitcoin than me. If we all lose all of our money, why on earth, or anyone else, why would you trust another one, right? You won't. If people will leave Bitcoin and lose all of that, like if all my money goes to zero, I will never save anything in any other currency. All my money is going right into the S&P 500, where you know was before. I see that as a significantly better store of value. Like the overall global stock market, that has done nothing but go up in forever, actually. And
So that's because you're a 50-year-old guy, not at 30.
not 50 yet, but but right. So like there will be no store of value, right? Because why on earth would I trust another blockchain? If Bitcoin could be destroyed by another altcoin, that other altcoins can be destroyed even faster. There'll be no confidence in any blockchain is a store of value going forward. And they will all be just transactional currencies. It'll literally be a hot potato. Who can spend it the fastest? And no one's really going to care. So so you don't want that. Like yeah, I guess you really don't want your currency to be just for spending. And it's funny because someone replied, like one prominent guy on Twitter wrote, I just bought a bunch of more Bcash. You know, I'm converting my holding from Bitcoin to Bcash. And someone replied, you do realize that Bcash is for spending, not for holding, right? I mean, again, right? Because that's what they're promoting, right? Like Bcash is promoting that your currency needs to be spent. Well, sure, it needs to be spent. Like, who's going to hold it? Nobody. Who's going to build capital on it? Nobody, right? All right. You have questions? Any more questions there? All right. Then we go backwards.
I was just wondering if you have any take on this tether thing and Bitfinex or any insight into that at all?
Not really. I don't really have any insight to the Tether situation. What I will comment on is Tether in general. Like I ignored Tether for like the first year and a half of its existence, because in the first year and a half of its existence, the total value of Tether was $10 million. Who cares? Now Tether is over $1 billion, maybe even up to $2 billion by now. Who the hell knows? My problem with Tether is, look, I don't know what's going on under the hood. I don't really care. But Tether is centralized. It's not decentralized. I don't see a difference between Tether and eGold. And how many of you know how eGold ended, right? So eGold was, you know, oh, we have a bunch of gold backing our digital currency. So you can go ahead and spend these digital tokens and there's gold backing it up, which is a great idea until the government shows up and takes the gold and arrests the people, right? So how exactly is Tether different? You have a bunch of assuming that every single Tether token is actually backed by $1. I think that's even worse. Like I would rather Tether be like some kind of a fractional reserve, because if every single Tether is backed by every single dollar, that's just an incentive for the government to say, you know what, we don't like how people are using Tether. The way the government said, we don't like how people are using eGold. They show up and they take the underlying value of the backing of the Tether. So I don't see anything good coming from this. So I'm pretty sure it's going to end badly, but we don't know when. All right, let's go in the back there.
Currently, the fiat system is designed to create debt as much as possible. What's your opinion whether blockchain will create debt or it will be better to
I wouldn't say that every fiat system is designed to create the maximum amount of debt. I wouldn't go that far, but I actually like an economy needs credit. Like I actually don't have a problem with the fractional reserve system. My problem is with like the current environment. Like so, all right. So there's 3 ways in which money gets printed out of thin air. So one of those ways is for speculative investment, right? So again, in a theoretical world, right, you have banks are given the green light to fractionally reserve at 10x, right? So banks are supposed to give you credit like you're starting a small business, which I actually have, and it was impossible to get any kind of credit, right? But in theory, you're starting a small business, you're going to a bank, and you're trying to pitch them that you're going to run a successful business that is going to help the local economy. They give you credit. So they're printing money out of thin air at fractional reserve for you to start your business, because if your business succeeds, it's going to create jobs, it's going to help the economy, and and everybody benefits, right? If the economy benefits, you know, GDP goes up, everybody helps, and you can pay back that loan. Okay, so that's one way. Another way money gets printed out of thin air. Now that's a good way. Like that's good credit. This is how it's supposed to be. This is what fractional reserve is designed to do. Like if there was never any fractional reserve, we may not. I might not be standing here. Who knows if we would have internet? Like if we had the gold standard for the last 100 years straight, who knows if our technology would be where it is today? without the fractional reserve, printing money out of thin air for businesses, right? Now VCs do it differently. They collect money from rich people and they invest in a little different, right? Now another way to print money is when you're borrowing, let's say for a house. Now that's very different than printing money out of thin air for a business. When you do it for a house, there is a small percentage of that money creation that goes to one part of the economy, building more homes. But you're basically borrowing for a 30-year mortgage, and then you're locked in paying it off. That's not exactly productive capital. It's much better than the third case I'm about to talk about, but it's not as good as the first case of borrowing to potentially start a good business to create more jobs. The third case is the problem. This is government overspending. And that's where the problem comes in, because governments can't live within their means. This is why we have budget deficits. And this is the big problem, because governments are collecting like what, $1 trillion in revenue or $2 trillion in revenue every year from taxes, but they're spending $3 trillion, right? And governments don't make anything. They just collect from productive people. Like governments can't make anything. So they need to live within their means. And not only are they, and if they just printed themselves $1 trillion a year, that would be great. But they're not printing themselves $1 trillion a year. They're actually borrowing it and paying it back with interest, to the point where right now the national debt is what, about 20 trillion or so, but 70% of that 20 trillion is accumulated interest over the last 50, 60 years or whatever, right? So if the government simply printed money for themselves and not borrowed it, our national debt would be 70% smaller. Now, but if the government was printing it to themselves, you don't know if they would have printed 70% more, right? So maybe the fact that they're borrowing it keeps them somewhat in check. And it's worse than that. Like, national debt doesn't bother me. It's the unfunded liabilities. It's the politicians that are promising pensions and healthcare benefits to the point where right now we have 120 or 130 trillion dollars in unfunded liabilities, and I have no idea, and neither do they, how they plan to fund those liabilities. And that's the problem, because if you default on your national debt, your population isn't really in danger all that much, because no one is going to come here with their guns to collect on the US national debt. However, when you default on $120 trillion of unfunded liabilities, you're defaulting on your teachers and firemen and the cops and all the other government employees and all of the people collecting government paychecks through government contracts and everything else. And those guns are already here, right? So this is what you really have to worry about, is that the government cannot meet the promises and the obligations of what they promised. But Bitcoin will have a problem of that first one. Now, I don't want to see the third one. Thank God that will go away. The printing of money to buy a house and to like kind of spend now to pay back later on a big ticket item, that's the borderline guy. That bottom guy is badly needed. Like, VCs can't fund everybody, which is why everyone is doing ICO. But I believe an economy actually does need credit. Now, we can say that the banks aren't responsible with printing money, but the banks are supposed to like evaluate local businesses that can grow into national businesses. And they're supposed to be able to print money for those businesses responsibly and give them money on a fractional reserve. Bitcoin doesn't have this. Will Bitcoin ever get it? I have no idea. But I believe that that is needed for your financial system. Got to eliminate that third one of government printing and borrowing money because they don't produce anything and they don't create jobs. But that first one is needed. How that's going to happen in the world of Bitcoin blockchain, I have absolutely no idea. All right, sure.
When moon?
Oh God, I honestly don't know. I do think that we have some more downside left. When it comes to trying to predict the bottom, there's two things. There's time and there's price. If the price starts to fall low, if the price falls really low really quickly, we can bottom next week. Like, if Bitcoin falls to like $1,000 next week, that's probably the bottom and we can start going back up. But if Bitcoin kind of lingers at $6,000 for the next 2 years, that's also a potential bottom. You know, people have given up, they've thrown in the towel, and then we start to go up. The most likely scenario is a continued step down. So I am looking for a bottom later this year, and either at around 49.50 area, or potentially all the way down to 1300. Now I'm hoping that the dip all the way down there will be swift and we go back up. But I do think there's a little more pain left because some of us lived through the 2014 bubble all the way down for like, about 12 months of down and then 3 months of nothing or 6 months of nothing. And I think the new people need to feel that pain to really understand what this is all about. And that's what markets do. Like, markets have a way of making sure the maximum amount of people feel the maximum amount of pain. It's just the way it always happens. But yeah, we will go back up. I am still expecting new highs. Probably not this year, maybe next year, but I'm pretty certain the year after for sure. But probably next year. All right, we're moving over here and there. I don't know how much time I have left, but we keep going until they kick me off stage. Last two questions here and here. Right.
See a trend in centralization beyond that.
A trend of decentralization. I really don't think so. Like, I don't think people really want decentralization. People always want to follow other people. Like, I just don't see it. Like, people people use the word decentralization in order to get money from other people in general. Like decentralization is really annoying and it's really difficult. I mean, you can use a decentralized browser right now. It's Tor. It's like the slowest, most annoying thing you can use on the internet, right? But use it. That's decentralization. That's the reality of the situation. Because in almost every decentralization project, there is no incentive to keep it going, right? Like, Bitcoin is a little bit different because there are now so many people that have worked on Bitcoin for so long. It's like they almost feel responsible if Bitcoin doesn't work at this point. And a lot of those people are heavily invested in Bitcoin. So they understand that what makes their Bitcoin valuable is the decentralization of Bitcoin. So that kind of keeps them going. And then people say, well, decentralized exchanges are coming. And I'm like, really? Who's going to maintain the decentralized exchange? Who's incentivized to maintain a decentralized exchange? Even if someone collects a bunch of money to build the decentralized exchange, what happens next? How does the decentralized exchange profit? Well, does the decentralized exchange collect fees? Where do those fees go? They go to the people maintaining it. If those people are collecting fees, it's not exactly decentralized, right? Again, is the decentralized exchange going to have their own ICO? Like, who's incentivized? Like, it's a fun project. Like, if you can convince people to pay you money to decentralize something, look, I don't want to make fun of MadeSafe. How many of you are familiar with MadeSafe? They've been trying to decentralize data storage in the internet forever, for like 20 years, right? Like, everyone is now trying to decentralize storage. I mean, I think that's a crazy idea. Why on earth would you want to store somebody else's encrypted data on your computer? Do you realize that you would be responsible for whatever is in those files, even though you have no idea what's in those files? I think a lot of these ideas are so crazy that people haven't really thought them through. I mean, right now it's and the laws get weird. I mean, look, if you don't password protect your internet, you are actually responsible for whoever is using that internet. So if you don't password protect your home internet and someone is driving by and connects to your internet and does something illegal, you can be held liable for that, right? And you have no idea who that person is. You have no idea what they've done. Like, how do people think it's going to work with decentralized storage? I don't know. I just don't get it. And again, who's incentivized to maintain these systems going forward? Like, almost no one. It really becomes a hobby. And at some point, a lot of people look, on YouTube, I like it. It started as a hobby. Oh, I'm going to start my own YouTube channel. I recently had to turn off comments to my YouTube videos because I was spending an hour a day removing straight up spam and scammers comments. I have to be responsible for that. And it's like, okay, I'm so annoyed. I either got to turn off comments or I got to stop doing YouTube videos because I'm not going to spend half of my day removing, scammers and spam because YouTube isn't doing a great job. And YouTube is incentivized to do this job, and they're trying to do a good job, but they're doing a terrible job of it, right? So now I gotta turn off comments. Now I gotta deal with people complaining that I'm not taking criticism and I'm censoring their comments, right, on my YouTube channel because they don't realize that I was so annoyed. So again, like now imagine if it's a decentralized project that everyone's depending on and they're holding you accountable. And you're like, why the hell am I doing this? Because if I start taking money for this, it's not decentralized anymore. Like the incentives are so misaligned. Like it has to be a real project that everybody wants and needs. All right, I think I have like one more quick question, and then we're gonna be done. Yeah, go for it.
Just a last question on price. Just curious if you think John McAfee's gonna have to pay up on his bet.
Well, he's gonna have to pay up. I don't see how he's gonna be able to actually pay up, right? Yeah, John McAfee. I've spoken at a few conferences with John McAfee. I don't know. I'm not a fan. Let's put it that way. But yeah, look, will Bitcoin go to $1 million one day? I hope so. That's the last thing you want right now. Like it can't scale that much that quickly. Like it made me nervous when Bitcoin kept going up and up and up and up. And when things go up out of control, they fall even harder, right? Like look at it this way. Right now, Bitcoin is 6,000. A year and a half ago, Bitcoin was $700. If right now 6,800 was the new all-time high, everybody would be happy, right? So it's not always what the price of it is, it's how it got there, okay? Like everybody would, like if it only got up there slowly, if we never went to 20K, if we just got to this point, everybody would be happy right now. So you don't want Bitcoin at $1 million in 2 years. You really, really don't. Because what happens when it goes from 1 million back to 50,000 after that? That's a big, not like what's happening right now. All right, guys, I'm gonna end it on this note. I kind of hope the live stream went well. So hope that worked. All right, guys, thank you for watching live. I have like 500 live viewers, and thank you for showing up. All right, I'm gonna go ahead and end the live stream.